All right, let's get this live stream started. Welcome everyone. Let me adjust my mic here real quick. Here's some shuffles here. All right, perfect. So, I just wanted to go over quickly. First of all, obviously, apologies about not doing the live stream yesterday night as usual, because again, our schedule is usually Tuesdays and Thursdays. 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. But here we are, right? Here we are. So, I first just want to start off with the fact that I was wrong about Jerome Powell. And he is pretty, it was quite astonishing to see that he looks stressed visibly just from person to person, observance. But his words were the complete opposite. He brought back confidence to the markets because that's how the markets reacted. They acted as if Jerome Powell, had everything under control. And in fact, his answers were pretty good. Even his opening statement might be a bit shaky, but the following questions that he answered from the reporters in the Q&A session were not bad. It was not bad at all. They seem pretty, set forward to giving us those 3 rate cuts. Because again, it was always ranging from 2 to 3. And if it was 2 rate cuts, then the markets were kind of fearing that, rates will be too high, or simply because of the fact that the Federal Reserve were not confident that inflation was under their control. And the fact that the previous 2 months worth of inflation data also kind of confirmed that type of bias. It really led me and a lot of others to believe that the markets were going to be reacting pretty negatively to anything that the Federal Reserve had to say or what Jerome Powell directly had to say to us. So, what should we basically do here from this point forward, right? Well, there's not much to do other than change our outlook. We got to be flexible, right? I mean, if you're not flexible, then how are we ever going to survive in this market game? So, moving forward, we're just going to continue to look at this market trend to the upside. I've said this for the past couple of live streams, the past couple of months, that the short term, mid term, long term are still to the upside until and unless we close below my daily 10 and the daily 21 SMAs on the S&P 500 and NASDAQ alike. So, excuse me guys, I think overall, the S&P 500 definitely has a lot of constructive work to do now after reaching all-time highs. This week, we hit an all-time high level at 424.11, and who knows, we can continue to go up higher until we hit like 550, right? I mean, there's no way of telling right now, but we do know for sure that the market has most definitely 100% guaranteed that the Federal Reserve is doing well. That's what the market told us on Wednesday. All right, that was the reaction that the market gave us. And so with the surprise with Jerome Powell answering those questions really well, just his answers were really just overall confident, right? I mean, that's exactly what we got from his his answers. And so, hey, Adriana, what's up? Welcome in. And so, again, from this point forward, we just had to I personally had to change my thinking and how I view my bias towards the Federal Reserve. I did not expect them to be so confident, and I did not really expect them to see that three rate cuts were indeed going to be enough for just this year. Because again, like I said earlier a few minutes ago, that the Federal Reserve was not really in the idea. Well, I thought that the Federal Reserve was not really confident with the fact that they've done enough to keep interest rates down, and the fact that we got 2 months of inflationary data that kind of backed up that idea, that bias. And so it's a pretty simple lesson on bias, right? On what can happen when you have a good bias, even if you have a pretty logical bias at that as well. So, I would just say that, I was wrong. I was wrong about Powell. I mean, it's important to understand when you're wrong and when you're right, so that you're able to quickly pivot and be flexible. So, that's kind of what I wanted to tell you guys today on about Powell, what happened on Wednesday, and that's exactly why I titled this as well, that I was wrong about Powell. So from this point forward, I just want to look at the technicals now, since FOMC is over. We won't be having one for another 2 months, if I'm not mistaken. I believe in May? I'm pretty sure. I don't really have the FOMC schedule for 2024 memorized. Yeah, okay, I'm correct. April. So April and May. All right, I think they coincide together. Yeah, April 30th and May 1st. So, excuse me, guys. So, I think the S&P 500 today, very, very constructive price action. It's making new lows compared to today's lows. It's, I wouldn't say that there was too little of action today. I think this is just the perfect amount. I mean, we saw VIX getting completely smacked down on Wednesday, so we saw that really big contraction of the volume when we were expecting big expansion. All right, so excuse me, guys. Let me something on my nose. So yeah, just overall, I mean, SPY, as long as it continues to do its thing, which is currently moving to the upside, I don't think we're gonna have too much of a problem. And give me 1 second, guys. Let me just blow my nose here. Let me mute myself. All right, there we go. My apologies, guys. So overall, I think SPY most definitely would like to fill in this gap. Today, I wasn't really expecting to see that gap because, again, that gap being filled because, well, VIX had contracted. The volatility index was showing contraction rather than expansion. So that means price ranges, right? Price ranges will be tightening up, right? I mean, the reason why I'm pausing there is that hopefully you guys can kind of fill that in your head, right? Because I've always talked about the vol expansion, contraction, what that means for day-to-day trading price ranges, and etc., right? So, Adriana, you said, no, you always have to be right. Well, it's just one of those things where you can be right for some time and then you'll be wrong and then you'll be right again and then you'll be wrong again, right? It's the seesaw action, and it's just a matter of how you react to it, right? You have to be very, very quick. And I was very quick to change my perspective as well on Wednesday, and I really wanted to share it with you guys on Thursday, yesterday, but I wasn't able to. So, I think overall, SPY should just continue to trudge on up higher until we hit a huge sell wall, right? I'm pretty sure most of the market makers already have a target in mind. We just can't see it as retail traders. We could probably see it in the options market, but overall, just from a technical perspective, we don't have any data to really look or base off our future price targets for the S&P 500, right? I mean, we don't really have anything to go off of because, again, we're in no man's land. We are in all-time highs. We are at areas where we have never reached before. So all we need to do is follow the trend, right? I've also been saying this as well, simultaneously with my current bias in the markets. And so, yes, I am still keeping in the back of my head that I will be expecting to see a pullback, right? And again, I told you guys this a couple of live streams ago. I repeated myself to you guys repeatedly that make sure you guys keep that in mind, store it in the back of your head that there is going to be a future pullback. So don't get complacent. And at the same time, you need to follow the trend, all right? And that's something that people get it's kind of a hard thing to do, I would say, for a lot of people, especially a lot of beginners. But there are a lot of people who are very, I would say, not stubborn, but well, I would say stubborn on trying to hold one single side or one single bias without taking a look at the other side. And it really wreaks havoc when that happens on your mental and emotional state as a trader. And so it's really, really important to understand that it's important to have two perspectives and understand that one of your perspectives are going to be aligned with the current market price trend. And the other one, you're going to have to store it in the back of your head for later use. Or usages, I guess, if there's multiple usages. So, it's a really good way to be able to kind of bounce back and then quickly pivot into that other bias that you had in the back of your head. And so, it's also another good way to not be complacent, as I said earlier, right? As I've repeatedly told you guys before in the past as well. So, I don't want to sound like, a robot just repeating what I said in the past live streams, but hopefully you guys understand. All right, hopefully you guys understand. All right, with that, let's go ahead and start off with kind of a market review. So let me change the music here. Let me give you guys a little mute here. All right, I think this one's a little bit better. Okay, so today semis were pretty strong. I didn't really expect that. I didn't expect to see especially leaders, semi leaders like AMD here, Nvidia, right? Nvidia especially today, even ARM, right? ARM, and I guess SMCI. I mean, yeah. It's not really a strong day, but overall, semis held up really well. And whenever I do see leaders, like the leading group, kind of coming back to life, we kind of get to see a domino effect. Or not even a domino effect, I would say a snowball effect. I was trying to think about a good word to use. Yeah, so a snowball effect where kind of that relative strength kind of snowballs down to the next leading group, which is, well, cybersecurity stocks, right? And for example, PANW, it did all right today. There was no big sell-off. Even CrowdStrike, right? Not bad of a day today. Just simple consolidation. Nice bounce today as well. So all these, or just if you just take a look at the cyber ETF, right? CIBR, right? I mean, very, very low volume, not really much of a huge sell-off, nothing really happening. And it's just the fact that I've noticed that there is this kind of relative strength in the semis. And again, I've said this before as well. Semis and cybersecurity stocks are the leading tech groups, right? And if you see both of those two different groups falling down simultaneously, then the entire tech sector or tech market will fall down as well, or NASDAQ. And so today we've had kind of this mixed strength, and we've been seeing a lot of mixed relative strength throughout the markets. And that's good and bad at the same time, because that just means that this bull market is pretty much healthy. The relative strength is just kind of going from place to place and making sure that everything has a good small pullback, and then comes back to gain some relative strength and starts leading again. And then another sector might lose a little bit of relative strength, pull back, and then bounce, and then regain that relative strength, right? So it's a constant flux of this changing of the relative strength. And so that's the reason why I've told you guys that, if you want to see a simultaneous move down on the overall markets, a textbook pullback, we need to see leaders all moving down together first. But that is not what we're seeing. We're seeing individual relative strength in different leading groups, right? One at a time. And so, if semis are leading today, and they did with strength, there is a good chance that cybersecurity stocks, cyber, will be able to bounce next week, right? And, it might be a far stretch to say that, but that's kind of how the markets move within this constant flux within its individual leaders, right? And so, and make sure you guys write that down if you guys didn't know that, right? So, it's something that you guys should understand. You guys something that you guys should be watching out for every single day when you're watching the markets. And if you guys aren't in the public CFO Discord, I've also provided a huge, nice full watch list of, the different sectors in the market and the overall markets that you guys should be looking at. It's a watch list on TradingView, so on this platform that I'm showing you guys, and I also shared it in my public Discord. So if you guys want in on that, please let me know on Instagram. Message me. Ooh, my God, my nose is stuffy today. I don't know if you guys can hear it. All right, so, with today also seeing kind of bad market internals, market breadth overall. Well, that's due to the fact that IWM, so mid caps and small caps, were having a pretty horrible day today. I don't think I have much to say here, right? IWM rejected at that previous supply area of 210 to 209, and yesterday, it got smacked down at this 209 level. And this is something that I've been kind of looking for in IWM, where we see small cap and mid cap stocks losing strength and seeing that strength also rotating back into the leaders, right? So like the mega cap stocks, or even just the large cap stocks overall. So again, this market cap rotation and these constant sector rotations as well are an overall sign that the overall bull market that we are in right now is healthy. All right, even if my other perspective, my other bias telling me that, hey, we are needing a textbook pullback. There are a lot of warning signs as well. I can't rely on that, right? I have to focus on what's in front of me. And so, that's the reason why you need to know and understand when you're wrong and why you were wrong, right? Why you were wrong. That is very, very important, so that you guys can, or you can personally pivot very, very quickly back into that other perspective, so that you're not losing money making decisions based on that current bias that you may have not left from, and you continue to use that bias, and you continue to lose money on that bias. And so, that's a little bit of a lesson here on how to be very flexible in your thinking and your bias, because we all have biases. And if you think that you don't, I mean, you do, or else you wouldn't be able to be trading in the stock market, going short or going long, right? So, that's something that you guys should be thinking about. But overall, I think it was a pretty good lesson for me today again to understand that, hey, it's important to know when you're wrong and be very, very quick to know why you were wrong and be able to pivot to or back to that other perspective or bias that you've had. And so, it's quite funny when you when you're looking at it after the fact that your bias was invalidated, because you're like, oh my god, I could have just maybe even earlier switched my bias. But hey, you probably couldn't have done that, right? Because that's just the hindsight bias coming back in, right? Or kicking in, the hindsight, right? And again, hindsight is always 20/20, right? It's perfect vision. So, you really shouldn't beat yourself in, because hindsight is telling you that, hey, you could have switched your bias a lot quicker and maybe saved yourself a few more bucks. But hey, that's not something that you shouldn't worry too much about, right? As long as you're able to quickly maneuver your net direction on your portfolio. For example, I was net short going into the FOMC meeting, and then I ended up becoming neutral, and I became even more net long into the end of this week. So today I became a bit more net long from my mental state and on my positions as well. And so, it's important to really congratulate yourself as well for being able to do that, because it's very hard to switch like that when you have a conviction and a bias converging on top of each other. So hopefully that made sense. All right. I kind of wanted to talk about that yesterday night, but here I am talking about it today. And hopefully you guys are able to understand what I'm saying. Hopefully you guys got something out of that. If you guys did, please let me know in the live chat room or on the comments down below. And again, apologies about my voice. I may sound a little bit stuffy, but hopefully it doesn't sound too stuffy. But yeah, I mean, it was a pretty interesting market reaction to the Federal Reserve. The Federal Reserve's overall actions, their words, Jerome Powell's statements, his answers to the press, and etc. Right? So hopefully this makes you guys understand that I am also prone to error, right? No one is perfect. Yes, someone can have a great track record, but hey, everyone has losers, right? Everyone has errors. Everyone makes mistakes. Right? We were all taught that when we were kids, right? Hopefully. So, overall today, strange day, but at the same time, not a strange day, because we've been kind of seeing the same thing happening over and over again since February. And overall, VIX just contracted immensely this week. So I would expect to see the markets continuously moving to the upside within the same trend that it has been in since October's lows. And overall, we're seeing a healthy sector and market cap rotation constantly. It's a very good constant flux, very, very healthy. So yeah, I mean, that's kind of it from me today, guys. If you guys have any questions, please let me know. If you guys have any tickers that you guys want me to go over, please let me know in the comments as well, or in the live chat room. I'll be waiting. is that no takers? No takers from anyone? I guess you guys are pretty tired out from this week's price action, huh? Well, that's kind of what I wanted to talk about today. Again, apologies about my voice if it sounds a little bit stuffy. There's something in my nose, I can't get it out. Too much information. TMI, I know, but apologies. But again, I just wanted to just tell you guys that it's you guys should be flexible, right? And hey, what's up, Nilesh? What's up? Hopefully I said that right, your name. My apologies if I didn't. Yeah. So basically, again, be very flexible. Again, it's hard to switch, but after years of experience, I was able to switch within the hour, right? And kind of prepare my mindset on what I could expect on Thursday, and that's what I did. And so sometimes for people it might take weeks, months, but again, it all comes down to experience, right? So yeah, let's go ahead and go with BABA. So yeah, I know you've been we've been mentioning BABA for a while, but this is kind of what I've been saying about BABA. Whenever we have a large move to the downside or to the upside, and we start moving sideways, you can assume that that current trend is over, right? So in BABA, well, we've been moving to the downside for a long time, right? And if you actually like really just zoom out all the way out on the weekly or even the monthly time frame, we've been basically essentially consolidating since early 2022, right? And so yes, we're still moving to the downside. However, we still haven't really retested this low here that we made in October of 2022. So we've been holding off of this low, and we've been moving sideways. Yes, still to the downside, but from a larger perspective, let me just go on the monthly here, right? We are slowing down on the sell-off. How do we know this? How can we confirm this as well? Volume. The volume is starting to curl back down, right? It's starting to look like an upside down U, right? Or not really an upside down U, but like a really, really shallow hill, right? There's no peak, but it's starting to kind of roll back down. The average volume here, right? This orange line on the monthly perspective here. So this is kind of telling you that, hey, selling momentum is dying down, first of all. And the price itself, the price action itself is telling you that the selling is definitely dying down, right? Just the price action alone. And so on the weekly perspective, is there still room to move to the downside? Yes, but we shouldn't be seeing any rapid moves to the downside, right? I mean, that just doesn't make any sense from all the higher time frame perspectives. And so from a bit more specific perspective, BABA has been consolidating sideways, which is a good sign, between 70 and 78. All right, it's a nice 8-point difference here, but we've been ranging since last year, right? Since December of last year, back and forth, and at some point the price is going to get really tight, either at 70 or at 78. And from what I'm thinking, and the overall Chinese markets, there has to be a capitulation point. And so if a capitulation point arrives for the overall Chinese tech market or tech sector, BABA should tightly consolidate right underneath this $78 whole number level. Let me actually make it a little bit more accurate here, guys. And once that occurs, we should be able to see a nice bump up higher and be able to see a nice breakout until we're able to retest or maybe even coincide with the weekly 50 SMA, which at that time, who knows how long this consolidation will go for. And just judging by that or not even just judging, assuming it takes long, we can be seeing or predicting that the weekly 50 SMA is going to be coinciding with this $78 level. And we can see a simultaneous coinciding retest of the $78 level and the weekly 50 SMA moving average. So, that's kind of my bias. I love to see kind of this rectangle box that's forming, especially after a large move to the downside, and especially after a multi-year of consolidation. Right? I mean that's quite long. So overall, BABA, yes, it can still go down. That's for sure. Unfortunately, but I don't think BABA should be making all-time lows. At the very least, I don't think that's a high probability in my own perspective. And BABA should be able to move out of this nice consolidation rectangular box once it's able to break over 78 and obviously the weekly 50 SMA. All right. So, it's very, very simple, but that's the way we should be looking at this name. It's a very, very simple way to look at it because you need to be looking at it in a very simple perspective and only focus on what we see right now, which is a nice consolidation phase since last year. And we've been stuck between the 70 and 78 price ranges. Okay? All right, so hopefully that kind of explained BABA for you. I really want to get into BABA long term as well, so maybe I'll look into like 2026 contracts if they're even available. They should be. It's a very liquid name. So so BABA, I really like it long term. I would want it to go back to a triple-digit share price, but that might just be a pipe dream. Unfortunately, the minimum I want to be able to see the price going to is at least, upper 80s, right? Upper 80s, so over 85, and maybe maximum like 90. The only reason why I say that is that Chinese names have been battered to the ground. I don't think we're gonna be seeing a rapid, like very, very quick recovery to the upside unless the government says something very positive. But at this point, I think it seems a little bit too late to try to do that from the government, to try to save their own markets and their own private sector after really just smashing them down and all of their business operations in the past few years. So it is what it is, right? It is what it is. All right. Well, that is it for today, guys. Thank you guys so much for watching. We'll be going back to the regular schedule next week, Tuesday, 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. And as always, make sure you guys are trading safely. Know your risk management. Know your risk tolerances, especially. That also ties in with risk management, your own personal risk management. But yeah, overall, just be careful out there, guys. Remember what I've been telling you guys for the past couple of weeks, and you will be fine. Okay, so have a great rest of your weekend, and I'll see you guys next week. Thank you so much for watching.